Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes on Tuesday, the 28th of January. Starting off with Eternity Networks, which is certainly new to the Bulletin Board Heroes. Here we've got a break of this triangle, I suppose, from as long ago as June. Vertical move here after a sideways shuffle, and hopefully the stock will, while it's above the 50-day moving average at just under 43 pence, will make further progress and retest the best levels of last year through 65 pence. Next stock is one which is rather more familiar than to Bulletin Board Hero listeners, and it comes in the form of Itaconics. There's been plenty of false dawns all the way down, one in May, one in August, and even in December. It's like the fourth, fifth time lucky here with the break of this falling wedge that we've got at the moment from last month. The hope here is that shares will close above 1.4 pence, or even above the 50-day moving average of 1.5 pence for confirmation, and then at least retest the area of the 200-day moving average and last month's resistance at just over the 2 pence level. Decent bullish divergence over the recent days in the RSI window, and that final capitulation with a bear trap, one-day bear trap, which is normally a decent sign there, just narrowly breaking the October low below 1.2 pence. That gives us some clue that the stock is ready to head higher, hopefully for rather longer than it did in the past. Next up, a stock which I'm pleased is back in the heroes camp today. Infrastrata had a rather torrid ride over the last few months. You can see that the shares have come back a long way, but a decent basing since the early part of November. We've just broken this triangle here, breaking the the 0.28 level, that sort of thing, and really while we're above that on an end-of-day close, looking for further progress, hopefully towards the recent, the former August support around the 0.4 pence area, and then ideally towards the 50-day moving average area, and that little gap there during October at 0.5 pence. So let's see how that particular situation pans out. Lots of people looking around for any stock which might have gain an advantage as far as the current coronavirus situation. Here we've got Novocyte, which did spring up yesterday, or initially today, in fact, towards 20 pence. Overall, we've got a channel here from as long ago as March, and depending on obviously how the fundamentals of this crisis continues, we've got the floor of the channel there just under 13 pence, while we remain above that. The big target here on a very illiquid stock, back up towards the 40 pence level over the next couple of months. On to a stock which has been hit many times and hit quite hard. Nonoko, obviously the big gap down there in June last year was extremely painful, but it's the second day of the stock trying to break to the upside. It's broken above the 50-day moving average at 13 pence, and also this line of resistance from November at the same level. While we're above that, the hope is that the stock could at least head towards the 20 pence area, maybe towards the 200-day moving average there at the top of that rising trend channel from July. Obviously, if you're a fan of the company, you would be hoping for rather more, given how far the stock has fallen. Another obscure stock to maybe introduce you to comes in the form of SureServe. Here we've had, we're sort of quite well into this rally that the shares have delivered. But you can see that there's a rising trend channel there from as long ago as the end of 2018. The top of that channel heading towards 90 pence, and we're at 50 at the moment. While we're above, let's say 40, there is a chance of further progress towards there, even if we don't quite hit that rather ambitious sounding target. I've covered U Group several times, I think, in the recent past. The problem with this stock is that every time it rallies, it's well sold into, and we've seen that really in the aftermath of, I think, every time I've covered it. So probably in October, November, we had those rallies. They didn't really last, and normally the peak of the spike day is actually the peak of the move. But today we have managed to gap through the 200-day moving average at £1.23. And if you notice that when we had the gap through the 50-day line, the 50-day line did come as roughly a support. One would expect the same thing now, so support towards the £1.20 area, even if there is a pullback. The other, I suppose, positive here is that the fact that there are pullbacks shows that we're still in the early stage of recovery with burnt out bears running for cover. Best case scenario here, probably a target towards £2.20, £2.30 at the top of a rising trend channel that you can draw from September, and that's valid really while we hold above the 120 area. Finishing off with Zoetic, which we had a lot of chit-chat about it a few weeks back. People got a bit tired though, but it does look as though it's back again. The reason for saying that is, I suppose, the break of this resistance line here from November, and also breaking that falling wedge that we've had in place since the end of November. Situation now really while we're above 6p, looking for at least a retest of the late November resistance area around 8p, and who knows, after that the stock could be revitalized. On a larger scale, perhaps looking for the mid-teens if one believes in a larger trend channel based around the 6p level from the beginning of October. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.